Welcome to the Polish Business Podcast. I'm Bart, and here we explore the stories of entrepreneurs like you building successful businesses. Expect short, sharp interviews packed with insights and inspiration to fuel your business journey. Let's get started. Kasia Makarewicz, Senior Mortgage and Protection Advisor at Step by Step Financial Solutions, is today with me, and we're going to talk about buying your first property, your first house, your first home in London, in the UK. Kasia, welcome to the show.
Good morning. Good morning, everyone.
And so we had a bit of conversation about how affordable is London, and obviously everyone knows each single capital city of the country is less affordable, and our figures proves it is similar to London. We're gonna discuss the house prices. We're gonna discuss how to approach the first mortgage, whether what is the practical first steps to make it happen. We strongly believe, together with step-by-step financial solutions, that everyone deserves a home, a place called home. Kasia, first questions, obviously, tell us a little bit more insights into how London market is looking compared to UK.
Certainly. Obviously, first of all, thank you very much for the invite. Although obviously the step-by-step mainly is concentrated in Southampton, I exclusively cover London and surrounding areas. So obviously London for me is the heart of what I do, is the heart of my work for the last obviously more than 10 years really. And it is a very, very unique and very specific area in comparison to the other areas of London when it comes to the first purchase as well. London is the most expensive property in the market in the UK, as we know. I was actually looking into a data of the UK house price index in June 2025. And the average London property price is around 562,000, compared with the UK average, about 286,000, is quite significant. It is still more than 3.3% higher than last year. So we can see tendency that the prices are still increasing. The most expensive properties are still in Kensington and Chelsea area, just below £2 million. The cheapest one, Barking and Dagenham, 362,000, but it's still relatively much more expensive than the other, obviously, areas in England and other parts of UK. So as you've mentioned, the question is, are we able to purchase anything in London? Majority of us obviously face the question, shall we still continue renting? Shall we renew the tenancy agreement? But then again, in August, the average monthly rent reached 2,250 for a 2-bedroom flat in London, which is obviously making 6.3% increase year on year, and it's hitting a record high. So the question is, shall we still continue renting, or shall we actually finally approach someone who knows what to do and kind of guide us? It doesn't mean necessarily that we have to purchase within the next month or two, but it will be obviously a good beginning for us to obviously start analysing what needs to be done, what we have to obviously take into consideration if we're looking to buy the property in London. Because as I said, London is very a competitive market. We have to be very well prepared. And it's not only prices. Demand in London is very strong with limited house supply. So if we obviously have the budget, good if we've got obviously money, but we have to be well prepared, because if there is a good house, it will be gone. It will be literally gone within a few days. It may be still advertised as available, but it will be sold in 1 or 2 days. So that's obviously, we're kind of facing quite a lot of challenges. So high competition. Then obviously we're talking about affordability gaps, average salaries in London don't rise at the same pace as the house prices, making obviously lending multiple kind of affordability calculations even more complex. We have to obviously carefully analyse the income. Sometimes we have 2 jobs, but is it enough for the lenders as well? And on the other side, if we obviously compare the challenges, is obviously extra costs. It's not only our deposit, but also what is the service charge? What is the ground rent on the flats? Especially in London, because they tend to be much higher in comparison to the other, obviously, locations in the UK. So it's good preparation is the key. And this is obviously where we need to start analysing where we are, what is our budget, how much money we've got in our pockets, just to obviously establish in which area of London or surrounding areas we were able to obviously start our journey.
Kasia, this is exactly astonishing information. £2,250 per month for 2-bed flat. And considering that you can try to approach first property in London with a little bit of challenges on the way, you will be able to at least have a property in the market that is well demanded. So that's definitely one to consider. It's not how I will afford, is can you afford paying that high rent and not having anything?
But on the other side, we just have to take into consideration that our landlords were hit with quite significant taxations to pay. The interest rates increased significantly. Majority of landlords, more than 90%, had the mortgages on interest-only basis. So when a couple of years ago the interest rate was 2%, and now it's obviously close to 5%, the monthly payment increased substantially. So who's going to pay the difference? Not the landlord. All the costs will be passed to the tenants, to us, who obviously need to rent the properties. So the question is, although I'm facing 2,250 rental income now, it doesn't mean necessarily it will be the same next year. By all means, landlord able to obviously increase the rent. There is, of course, obviously on the background, lots of legislations and lots of regulations by how much and when and what, because we obviously have lots of rights. But the property doesn't belong to us. If there is a valid reason, landlord able to obviously issue section and then obviously end the tenancy. So we would need to effectively face eviction. We have to find and relocate. It's a long procedure. I'm not obviously saying it will happen over a course of a couple of days or weeks or months. But effectively, the property doesn't belong to us. So we just have to obviously think that, yes, we pay this amount of money, but it doesn't have to be all the time for the rest of our life. And of course, our needs and demands may change as well. We may need to relocate due to the work duties, school, children. We need to obviously have a bigger house. Our expectations may change. Of course, the more we earn, we would like to obviously have more, obviously, luxurious properties, a little bit better, in a better, obviously, locations. That's why we obviously work. So sometimes at one stage, we just have to ask ourselves, is it actually better off to start a climb on the property ladder? Are we ready? We may not be ready, but at least we have to obviously have that conversation. Is it good enough? Are we good enough? Are we on the track to get something? And keep reviewing those plans quite frequently.
And this is exactly that. And before we move on to the documentation part for first-time buyers of London properties, I would definitely say a bit of our we call it immigrants kind of mindset is that many people that are living in London are coming from countries like obviously Poland and other European and not only European countries. And there is a myth, at least in my generation, when you own the property, then you need to stay that in the property for life, and you're going to be paying that mortgage for life, which is obviously completely not truth, isn't it? Exactly. The property will change the value. You can change that. You don't need to commit to the mortgage product for longer. you have opportunity to rent that place, if you own.
Absolutely.
So there are lots of places, so you don't need to be there like for entire life. And that is probably what some of our listeners probably might not want to move to that conversation, because they don't want to tie in till end of the
Absolutely.
time.
Absolutely. And it's obviously down to the lack of knowledge, because obviously they haven't spoken with an experienced mortgage advisor. They never had that question, am I actually ready? Am I actually good to get something? I think we're just a little bit scared, a little bit shy. We're still maybe obviously, but that kind of comes with our obviously the story, the culture that I don't think so. We still treat ourselves in the same level as other people living in the UK. We always kind of think on the background, we came from another country and we're just a little bit below of the level, and I think we're kind of downgrading ourselves, not intentionally, but I think we're still kind of scared to obviously touch something other people may have, because we may still think we're not ready, but we're absolutely ready. The amount of conversations I had with the clients who thought, we don't have enough money, we don't earn enough, are they going to lend us such amount of money? Is unbelievable, because it actually proves you're actually right, and you're able to purchase this property. What's more, you can actually afford more. You can actually afford something better, and that is obviously the change of attitude and thinking is drastic. But you just have to obviously have that spark in your mind. What if I purchase something? What if I obviously do something? Because without a constructive conversation with someone who knows what to do, you will be renting the property because your mindset is still closed. Bear in mind, I think the UK tenants spend around 41% take-home pay on rent. In some, obviously in London, 48% in Enfield, nearly 60% in Western Central, and then obviously Covent Garden, King's Cross is around 60%. It's a significant amount of money. So you just have to, as I said, open your mind and change something. If you've obviously in a good health, you've got the salary, then you just have to start thinking. You don't have to close your mind that you're only able to rent, because you came to this country to rent and work.
Exactly that. This is the motivation, ladies and gentlemen. So moving on, documentation, first-time buyers, London. Tell us briefly what London buyers of properties need to have.
Absolutely. And the catalogue is very very simple and easy. And whether obviously you going directly to the lender or speaking with different mortgage advisors, the catalogue should be the same. And the sooner you obviously have that conversation, the better you actually prepared. So of course we would like to see the proof of your ID, the addresses. Of course, if we don't have the British passport, we have to prove our settled status as well. And then obviously, the most importantly, we have to carefully analyse our income. So if you're employed, payslips, the last 4 months payslips, P60. If you're self-employed, majority of lenders will ask for the last 2 years worth of tax returns and corresponding tax year reviews. And of course, obviously, we need to see where the deposit is coming from. But then again, there are different sources of deposit, mainly savings. It could be obviously our beloved bank of mum and dad or grandma as well. Some of the lenders may actually use a loan as a part of our deposit. So there is lots of to discuss as well. But the sooner you obviously have that chat consultation with the advisor to analyse the documents, we've got time to ask lots of questions. We're able to analyse the credit report as well, if there is anything unusual. We're able to carefully analyse different sources of income as well. Bear in mind, in London, because the cost of living is quite high, we tend to have 2 jobs as well.
Yes.
Is it enough for us to apply for the mortgage? Again, every lender is different. So if we have a brief conversation with our bank, because they've just called us with a random question and all of a sudden the conversation is leading into mortgages, and then at the end of the day, they may conclude, oh, actually, it's not ready. You're not there where we want you to be. That's only one lender. even with high street lenders, they've got such a different criteria, what is actually acceptable and not acceptable. You will be actually quite surprised, and you don't have to apply for the mortgage with the bank. You've got obviously your current account, and even based on the same income, they may come up with completely different criteria. So again, the sooner you present those documents, and of course every broker complies with the data protection, we're not using that information for anything else. We'll purely tell you what is your affordability. We will tell you what is affordability, what is the maximum lending amount, how much money you've got in your pockets, whether you're good to go, or what needs to be done in order to be where you want to be when you see yourself in 6-12 months' time.
Definitely highly recommended to do that kind of what we call it audit of your finances and see like what path will lead to your really your not only home, but I think for many lifetime investment.
Absolutely. So even if we say initially, well, actually, we're not there where obviously we're just a little bit too early, because we wouldn't say you're not good for the mortgage. It could be it's just a little bit too early. Yeah. But then again, it may prompt you to think about what do you do. If you was thinking, oh, actually, with my skills and my experience, maybe I can apply for a different job. Again, it comes from our mentality that we're looking at our parents, grandparents, once they start the job, they're just literally there for 20, 25 years and they will retire there. The UK market is so energetic, so flexible. When on the CV, people would like to see that you've got that kind of jump from one job to the other job. Of course, I'm not talking about every 6 months, but once you reach the maximum you can get, maximum experience, people tend to go to a different workplaces with a bigger salaries as well, every 5-6 years. Otherwise, you will be seen as someone who probably doesn't really care about experience and self-motivation. So again, if you're not ready now, it may actually prompt you to get extra qualifications, get more experience, think about changing the job, and maybe having that conversation with your manager. I've been here for such a long time. My figures, my targets are met constantly. And then again, maybe I'm ready for the pay rise. Again, it may come from our mentality and the way we've been raised that we shouldn't ask for more, because the people around us will see that we're quite good. And they will offer us a pay rise, they will offer us a bonus, they will offer us a different job. But the reality is different, because if it's not us, we will be kind of forgotten.
Yes.
And the other people who will actually fight for ourselves with a younger generation, because they will come and they will show on a plate, I've done this, this and that, and I think I deserve a pay rise. We, as obviously people from Eastern European countries, we kind of sit on the back in the corner thinking we're good what we do, but we never approach them directly for a pay rise, because it comes from our mentality that we shouldn't ask for more, which is wrong. We have to learn that. Again, we have to come out of our comfort zone, but we have to learn and ask for what we deserve. So again, having that conversation may not be life-changing immediately, that we will register ourselves with estate agents, but we may obviously change the way we work in our lifestyle. Just to think where we actually see ourselves, what we actually need to do in order to obviously start savings, in order to obviously have a better affordability, and then obviously kind of be a little bit more self-motivated, I would say.
100%. So now moving on, it is you did mention about someone working, and this is a great valid point about being more bold with who we are and what skills are we bringing on the table. Moving on, self-employed is very important, but quite a lot of self-employed people around us, millions. I don't have exact figures in the UK, but self-employed is classified as someone who is sending the invoices, only yourself, maybe some colleagues you pass the jobs, but it's still small business, very micro business. Mm-hmm. So some self-employed people say like they are not ready. It's completely not possible to get a mortgage and have a house, home, any property in London. So how do you approach this?
Absolutely. So looking at them kind of mortgage data, it's around 44% applicants are self-employed. So it's a good chunk of business for the lenders, and lenders need self-employed people. So obviously it's not true. You're still able it's possible to get a mortgage. But being self-employed just means lenders need more evidence of consistency in your income. So many lenders will actually specialize in self-employed applications. As a general rule, majority of lenders will ask for the last 2 years worth of accounts. So 2 years tax returns with tax year reviews. Again, it's a little bit more complex, but more flexible as well if you've got limited company, because the lenders will ask for your director's salary and then again the dividends. Now, I've got lots of obviously clients saying, but actually on the payroll, I'm employed. I'm going to send you my pay slips. But if you've got more than 20% shares in the company, you will be assessed based on the self-employment criteria. And then again, as I've mentioned before, this criteria is different lender by lender. So majority, as I've mentioned, majority lenders will ask for the last 2 years and they will take director salary and dividends. Some of lenders will look actually deep inside your limited company accounts and they will take the net profit, some of them before taxation, but some of them before taxation.
Brilliant.
So overall, the income will be much higher. Again, if it's not enough, but then again, it's down to the experience of the person you're speaking with. We're looking into, do we have any pension deductions? Are we able to take them into affordability? How about van expenses? How about using your own office? Are we able to remove from expenses and increase affordability as well? So those are very crucial elements, may make obviously huge impact on affordability. Of course, obviously on the other side, we do have lenders accepting 1 year accounts. So especially when the borrower has a strong track record in the industry. So we can imagine someone was employed, built obviously experience, the bank of clients, and now went on own, opening, whether it's a sole trader limited company. Doesn't mean necessarily have a 2 years worth of accounts, but we can actually present a strong track records. We're able to use only 1 year account. So we're able to back up the figures with the business bank statements, with maybe obviously projections for the next year, a letter from accountant that can be also approved by high street lenders before we approach small specialist lenders when it comes to the affordability. But the crucial element, especially when it comes to the London area, we always have to ask the question, what was the reason why you went self-employed? Yes. And sometimes you may think that, oh, actually, I'm a daily rate contractor. So that's completely changing the perspective of our assessment. We're able to put the limited company on the site and look into the gross contract. So take the gross daily rate for affordability. Again, you may then obviously pay via limited company and umbrella, slightly different calculations. But majority of the lenders will use 12 months gross a daily rate, 46 weeks, 48 weeks. Such a massive difference in affordability. Yes. Again, quite important, maybe obviously for us, because majority of our obviously probably friends and families work in construction. Yes. And majority of them, I would say 99%, are CIS subcontractors. So obviously the 20% is deducted of the source immediately on our invoices. Again, we still need to go for a tax assessment, but we do have lenders, high street lenders, who would again put tax returns on the side, but they will look into your last 3 months invoices and they will actually take the gross salary before taxation. So it's in essence, you treat it as employed because I don't really care about your expenses. We tend to have, if you've got obviously a good accountant, to put ticket expenses, petrol expenses, tools expenses. And then obviously this is our net profit. But then again, with the CIS subcontractors, it's the gross salary before 20% deduction, and we can average in the last, obviously, 3 months. Again, we can take 48 weeks, 46 weeks, or 12 months, but it's a huge difference when it comes to affordability. In average, we're able to get around £60,000 more. So it's a huge, huge difference when it comes to the market, especially London market. And again, if you're speaking with, Nationwide, for instance, order your CIS subcontractor, they will ask you for tax returns and they will average the last 2 years. But then again, if you go to Halifax, NatWest or other lenders, they may have completely different calculation. Your affordability will increase. And again, if you, as I said, speaking directly with the lender who does have completely different criteria, or perhaps you're speaking with unexperienced mortgage advisor who by all means may not know what is a CIS subcontracting job or daily rate contracting, you're losing a possibility and opportunity to purchase your first house sooner than later. So again, I strongly encourage to have that initial conversation, to send all the documents and see exactly where you are. What needs to, what is your affordability? Because again, being self-employed doesn't mean it's complex. A couple of weeks ago, I had a client who's a taxi driver. So obviously we needed to take tax returns. But he purchased a taxi. Obviously, the black taxi is quite expensive. We're thinking about £120,000. So that was shifted into the personal credit. And it's showing as a personal commitment. Majority of the lenders will take £700 per month as obviously your credit commitment, and it will have a huge impact on affordability. But there are lenders who will look into your tax returns. They will see that it's offset as expense. And some of the lenders will actually disregard this personal commitment because it's in relation to the business. And our affordability increased quite substantially by £210,000.
Wow.
In London, it's a game changer.
It is what a cracking example. Like, ladies and gentlemen, do not be afraid of that kind of conversations. And, you're working hard on what you're providing for your business. That is one of the outcome of all of this, is to have our own home in London. Moving on. So we talk about self-employment and access, to how's the process looks like, and first-time buyers now, like money. We need some money, and that is the down to deposit. Quite a lot of people say like, okay, deposit. How much do I need to have for first-time buyers in London today? What is the figure, Kasia?
Yes. So as a general rule, obviously we need to have a minimum 5% deposit. Again, we do have access to the lenders offering 100%, but affordability is very tight, or schemes with 5,000 as well. But generally speaking, we need to have a 5% deposit. So if we're looking for the purchase for 450,000, probably it will be challenging to find in London. It's around 22,500 only for the deposit. So it's quite a substantial amount of money. I was actually looking into a nationwide data, which shows that the average first-time buyer deposit in London is around 110,000. So it's almost 4 times higher than in the north of England. So what we're going to do? If we don't win lottery, we need to have obviously a plan. We need to find where the money is coming from, really. So again, if we're not there yet, speaking with the financial advisor, we can analyze the bank statements and transactions and put some actions in place just to obviously find that a minimum obviously and deposit time. But also obviously if we're speaking with a sole applicant, we can purchase jointly with someone else, with a family member or with a friend. So we can obviously discuss different options. I recently actually had a case with sole applicant, good income, but we wasn't quite ready there in order to obviously affordability and the level of deposit. So I said, how about your parents? Because obviously they were living together. So we come up with a quite nice solution where we've placed application with 3 applicants, mum, dad, and obviously my client, where obviously we had 3 different sources of income. Then obviously the parents contributed towards our deposit. Our client obviously contributed a little bit. But what we've done, what is really important as well, because obviously the client wasn't sure if he wants to continue living in the UK, in London, or perhaps later on with the family, because the life cycle will change, will move on. So what we've actually did, we've placed parents on the title deed as the owners of the property, but they've left my client on a mortgage application only, which means that later on he's able to retain his first-time buyer stamp duty incentive, and the full procedure is called joint mortgage sole proprietor. So again, it won't be presented by majority of the lenders, but this is something unique. You can actually find out speaking with the financial advisor how we can make this happen. Who can physically able to obviously help us, because deposit is not the only cost what we're talking about, and every case, every situation is very unique, and we just have to make sure that with your personal circumstances, we're able to find a product meeting your needs and your circumstances, and then you will be happy with any actions you want to take. But obviously, coming back to the original question, is a 5%, but the 5% can come from savings, can come from gifted elements, family members, but also some of the lenders will accept your friends, your employer, your next door neighbor, if you've got the good ones. It doesn't have to be a family member. And sometimes it can be accepted through a loan. Not every lender will be able to do that. Again, taking any commitments will impact your affordability. So there is obviously a few caveats to that, but this is something acceptable as well. So speaking with the financial advisor is probably the best option. But then again, we do have access to 100% mortgages, and we do have access to 5,000 deposit only products as well.
I think this is also sensible advice to have a bit of a habit of, saving. This is another territory that we also explore, but having any extras and having a small percentage of what you're taking, having habits. I think some friend of mine, old accountant, always say like, hey, put the 5% of what you're actually earning into some kind of ISA or whatever. Like 5% is nothing really, But then that habit became like a big one, and over the time you can see like, okay, this 200 quid a month, it's just actually $3,000, 2.5.
Oh yeah, absolutely. There is lots of different schemes. You've briefly mentioned ISA, lifetime ISA as well. It's probably another time for another conversation what can be done. But again, as you mentioned, getting into the habit. Once obviously you've got a plan to buy something within the next couple of months or 2 years, definitely we can come up with some incentives as well. What is actually available in London? What is available outside of London? What are the criteria as well? What is the bonus effectively you can take from the government? But it's quite complex. It's probably worth to have another conversation about that.
So, wrapping up the conversation about obviously the affordability, and one of the blocker to get into the mortgage is, yes, I have a bad credit on mortgage. I like the numbers are not kind of looking good, and I've done this ratings and it doesn't look right. What is the truth, Kasia?
Right, so it's challenging. Bad credit doesn't mean automatically that the case will be declined, but certainly can limit our options. So again, speaking with mortgage advisor who will analyze the credit file will certainly increase the chances. Again, we're talking about little blips and blobs on the credit file in terms of the missed payments, to more serious one like CCJs or defaults, or more serious like debt management or bankruptcy, insolvency, debt relief. So we just need to know exactly what has happened, when, and whether it was satisfied or not. Of course, obviously, if we've missed a phone bill 12 months ago, it looks much better than missing perhaps a loan payment last month. So we just have to see exactly what has happened. Just to let you know, because it's a kind of misconception with majority of my clients as well, that, oh, I've missed or I had a default, but I've paid off in full. It doesn't mean, it doesn't really count. But the adverse credit history will stay on our profile for 6 years. So when we obviously approach the lender with the initial agreement in principle or full application, the lender will do the credit check. They've got obviously in place internal credit scorecard as well, and they will analyze the data available in the last six years. So they've got different criteria. So if something has been satisfied more than 3 years ago, it's fine. But if it's more recent one, we just have to see exactly what was the amount, because the lenders have certain criteria of the maximum amount of default, of the maximum amount of CCJ, how many consecutive missed payments we faced in the past to make the application acceptable. If it's a little bit more severe, then we have to go with a more specialized lenders. And then see what we can actually do. So, of course, the key is the severity and timing of issue. Buyers may need a slightly larger deposit, maybe 15, maybe 25%, or accept slightly higher interest rate. But the important message is it's still possible. But professional advice will help them to match with the right lender. Again, if perhaps... Again, my obviously case from last week, the client, everything was perfect. Affordability was perfect. Deposit was wonderful. But I didn't pass the credit score. And it was due to the credit data. And I was thinking, what actually happened? The client actually didn't know as well. So I've asked them to generate the credit report. And it's found out that the client didn't pay a parking ticket because he didn't update driving license. So he's got obviously a parking ticket, didn't get any documents, and the CCJ, so the county court order, was issued for pathetic £311. And that made impossible to approach majority of the high street lenders. Again, we obviously now have active application when we're able to obviously speak with the underwriters directly and explain the nature of what has happened, and obviously confirm that it was out of the character. The client is up to date with all the loans and credit cards, doesn't utilize any overdraft. It was simply due to the lack of updating the documents. Of course, we needed to pay the £311 the client wasn't aware of, but we needed to go with a specific lender before we've approached high street, before we obviously approached a more specialist lender. But then again, being on the top of your credit reports is quite important. Yeah. Being obviously checking the credit report on that very first initial stage, even if we think absolutely everything is perfect, just to make sure. I've seen lots of cases where the wrong data was applied to the credit report, when the credit report had wrong date of birth, pooling the wrong data as well, misspelling, which is actually quite common to us. And then we couldn't generate any credit report because not having any credit is probably equally bad as having the credit cards, because the system can't verify us. So we just have to see exactly what has happened, what we do. If our name is linked to electoral roll is quite important as well. So as I said, even if we have adverse credit history, sometimes we could be young, crazy, not obviously responsible. The data will stay with us for 6 years, and then it will be obviously gone. Again, some of the lenders will ask the questions, have you ever had? And then we just have to answer the question. Some of the lenders, have you ever had in the last 6 years as well? But even if there is something in the last 6 years, you need to really speak with experienced advisor. And absolutely don't limit to one lender, because every lender is different. And then we will obviously tell you exactly what needs to be done in order to get a good product. Again, you may, as I said, pay a slightly higher interest rate, but mortgage is such a long term commitment. We're not talking about 5 years or 10 years. I mean, I wish everyone will have a short mortgage. I wish obviously good luck to everyone. But generally speaking, we're talking about 20, 25 years. And when now the cost of living is actually quite high, it's 30, 35 years. Lots of things could happen. We will sell the property probably a few times in the meantime. But that initial, obviously, interest rate may be high initially. Later on, you can prove that you take reasonably your credit data, that you pay on time everything. But what I say to clients, regardless, the rates will go up and down, up and down. What goes down goes up. What goes obviously down will go up as well, like the prices of the properties as well. So we just have to treat this with a longer perspective and then obviously prove that we're good to go. So good, obviously, professional advice is obviously the best what we can do, but it's certainly possible, but can limit our options.
Kasia, thank you very much. It was like definitely we're gonna link up all the informations to book a meeting with you and have that initial conversations for anyone who's thinking of having a property down in London.
I mean, my main message, if I can obviously quickly conclude, is buying our first home or moving is very exciting, can be very stressful, but with the right preparation, you can enjoy. You can have laugh and it doesn't have to be overwhelming. But as I said, the most important step is to speak with the advisor first, because if we only focus on deposit, if we forget about extra costs like stamp duty, solicitor fees, valuation fees, moving costs, so or perhaps we fell in love with the property, which will be ticking all the boxes, and all of a sudden we will say, oh, actually, it's not affordable, then obviously we may lead to the disappointment. But just to obviously avoid those pitfalls, ensure that buyers know their true budget, and we will match them with the right lender. You need to obviously, the clients needs to speak away with the advisor. And as I said, the London market is very competitive, and that preparation will make a huge difference.
Excellent, Kasia. This is honestly fantastic conversation. I have to ask final very quick question. You need to answer very quickly for this one. So, considering that, what property would you like to? So, considering you would have, I don't know, 200,000 deposit, and you would be in your early 30s, maybe with your boyfriend. What area of London would you like to buy the first property?
To be honest with you, whatever you feel your heart is there. So I always.
What would be your choice?
My choice.
Yes.
Oh God. Oh, I've got high expectations.
100,000 deposit in your early 30s, no kids. So what would you like? Obviously, you know the market. So what?
Probably. With 200,000 with affordability, probably Loughton, Faden Boys area, you can actually get a really nice house. It's like a village, really. So good obviously, commuting links as well, good access to central London. But you can obviously get peace and quiet. But obviously, I'm the person who loves to have a cup of coffee in the morning in a quiet garden. I don't necessarily have to go out frequently every Friday. So if someone needs to stay central, go and obviously stay there. I think there is always a good place where your heart think you feel good. So once you know your budget, you can obviously check different areas as well and don't necessarily stay where you rent. Moving to a different parts of London or surrounding area is not that scary. We've done this before when we came to the UK for the first time. That was probably more difficult. We've managed. Because obviously where you are at the moment, now you're looking to purchase the property, so you're definitely able to change your surrounding areas. Everywhere. As I said, London is such a unique and good place to buy. 3.3% more in comparison to the last year when it comes to the value of the properties speaks itself. Again, It could be temporary solution for the next 5-6 years before we've got children. Then obviously our expectations and requirements will change because we would like to be in the catchment area of a good school. That's a good mentality for us when we actually push our children as much as possible as well, and we want to achieve them even more than what we did. That's a good kind of lessons we learned from our parents as well. But then again, we will be talking about moving costs, selling the property, how much equity we've got, and other costs as well, and moving to a different areas of London, or maybe completely relocating to Colchester, or I don't know, Nottingham, or maybe Southampton, and have a walk every evening on the beach. Who knows? Sky is your limit.
Kasia, and that was Kasia Makarewicz, Senior Mortgage and Protection Advisor at Step by Step Financial Solution. Excellent, Kasia. Thank you very much.
You're very welcome. Have a lovely day.
Welcome to the Polish Business Podcast. I'm Bart, and here we explore the stories of entrepreneurs like you building successful businesses. Expect short, sharp interviews packed with insights and inspiration to fuel your business journey. Let's get started.